Hey everybody, this is John and welcome to the free video. So it's interesting, we're seeing a couple issues drop in the market. We saw, first of all, Google had earnings, gapped up not very much and then sold off pretty hard. Amazon, obviously didn't have a good time. And now you can see after hours, the NASDAQ is down 19 points today. Well, why is that? And if we look here at Facebook, you might look at this and say, well, that's not too bad. I mean, it's $127, but then if you can see where it's trading after hours, it's down almost 10%. And if you look at the price action on here, what's interesting is that, when it initially came out, it's like, okay, here's earnings. Oh, they're actually pretty good. And then on the conference call, and this is a 5-minute chart, Zuckerberg had mentioned, well, Q4 sales, we're not looking for that, that strong compared to last year, because last year was super strong. Boom. The expected move on this was $6. And right now it is down almost $11 after hours. So almost two times the expected move. So if we step back here and we look at a weekly chart, that would put us around, give or take, right about in this area, which again, from a weekly perspective, not a disaster in any sense compared to where this thing has gone. It's one of the top 5 biggest companies in the United States in terms of market cap. But the problem, if you could be called a problem, is that the idea that the market is going to be saved by tech is starting to look like a very weak argument. Okay, so if we come back here, so that's Facebook, right? If we look at Google, Google had good earnings, and now it's just getting dumped. Amazon, a little light on the earnings, getting dumped. Okay, Apple. So if we come over here and we look at NASDAQ, there's, the big kahunas here have not come out and said anything like, oh, by the way, not only are our earnings growing, they're way bigger than expected. Earnings are accelerating, profits are expanding in a way that's above and beyond Wall Street expectations. And what we can see right now and what's happening is that we're seeing a situation where if it's not blowing earnings out of the water, the stock is getting distributed. Compare this to, like, say, F5, which blew earnings out of the water, or Netflix, which blew earnings out of the water. Okay, so there's a very definitive line in the sand here. So the question here, and the main thing to kind of keep in mind, as obviously we're coming up with an election and things like that too, is what can happen next. And the easiest thing to do in a situation like this is very simple, is to play the setup that is right in front of us. So in this case, the chart, the setup that's right in front of us is a squeeze on the NASDAQ. Okay, you can see that the DMI here very strong to the downside, but the ADX is only 13.46. In a big move, it typically goes above 25. This implies a big overshoot of this low. Okay, and it would actually make sense that we sell off into the employment numbers on Friday, and then of course we'll see. Traditionally, for a long time, the employment numbers have come out and the markets have rallied. This time certainly could be different. So how is all of this going to play into the election? I think this could be one of the more volatile election reactions we've ever seen. We can already see the volatility coming into the market. For those of you that don't know, we are going to be doing live trading on the 8th and the 9th, just around the election. I'm expecting the volatility to kind of explode, and you might think, John, that's crazy. Why would you want to trade during that much volatility? Well, guess what? You don't have to load the boat here. When you have this much volatility, you can trade a one lot, and it wouldn't take very much to make up the price of the class. And as you guys know, when I do this stuff, the goal is that in trading a one lot, we can at least there's 2 important things. One, learn new skills, okay, how to trade a volatile market, because I think, this is going to be a very prime example of it. But 2, to potentially, and obviously there's no way I can guarantee this, but I try as hard as I can, and more often than not, this is what happens. Trading a one lot, you can end up paying for the class. And for those of you that have taken classes, you know that. And last, it's just going to be a historical. It's going to be a historical event. So how are we going to do this? Well, we're going to trade about half the day on the 8th, leading into the cash close. Then we're going to take a break, and then we're going to break out the coffee and the wine, and we are literally going to sit there with our charts, trading the election live as the delegate count comes in. And the market will fluctuate wildly based on if it's the perception is Hillary going to win, or there's a picture over here of Trump that you can't see, and it's just going to be volatile. And it's going to be currencies, it's going to be bonds, it's going to be gold. So what we'll be doing is on the 8th during the cash session is, yes, we'll be trading some futures and currencies, but we'll be also setting up specific option strategies that are fairly safe to hold into the election. Okay, and then trading futures during the overnight session. We don't know how long the overnight session is going to last. I hope that the election's a slam dunk by 11. We know who's going to win. We can trade another hour and go to bed, but maybe we won't know. It'll take a while to know. And then we'll wake up the next morning and continue trading, so it's going to be a lot of fun. So anyway, simplertrading.com/TTE, and that'll get us locked and loaded as we head into November. All right, you guys have a good one. See you at the next update.